The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 2nd. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, hey, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free. You can dial in right now, 877-927-6648. And if you can't dial in, well, let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 112 points, 24,494 is the print. S&P's up about 3, NASDAQ up 13. The Russell is the one that's making the move, up 1 2/10%, up 18 buckaroonies. Semis are up 12. That's up about 1%, it's really 9/10%. Trainings are back 63. You've got gold trading out 13.21, silver at 16.46. We'll go figure out what that means or what it doesn't mean. You've got light sweet crude up 22 pennies, trading out at 61.21. Leading the charge here to the upside, it is the sweet Nectar Therapeutics up 22% or 18 bucks and change. I see you. I see you. I wish I did see you. I can't see you. You can see me. I can't see you. But I see you. I is up 8%. 18 buckaroonies. 51 Job Inc. Jobs is the ticker symbol, up $10 or 16%. Vectrus up 30% or 8 bucks. Regeneron up 2.5%. Splunk is not splunking. It is blinking. I don't know what that means, but it's up 8.3%, nearly 8 bucks to the upside. To the downside, it is AutoZone. AZO, the ticker symbol, down $9.70. Equinix off $8.80. Atlas Financial down $8. Booking Holdings down 7. McDonald's is off 7. Foot Locker down 7. We've got things to look at to the upside. To the downside, the question is, what is it that you want to look at? Well, let's start actually with the Russell 2000. It's like, hey, what's going on with the Russell 2000? So in order to do that, we want to do a couple of different things. We want to take a look at its TAS profiles. Let's see if we've got this set up. Yeah, it looks like we have this pretty much set up here. You've got the 30-minute, the 60-minute, the 240, the daily, and the weekly time frames out here. The Russell 2000 is in the equity futures contract in the 120-minute time frame is the one that gave the best signal of a bottom, at least with regard to the tools that you like to use during this 1 o'clock hour. A couple of those tools being the market singing in that sweet key of G, wave number 7 to the downside. And that's exactly what has taken place on a 120-minute time frame inside of the equity futures contract. If we tried to do this on the IWM for a 120-minute time frame, we would not get these same patterns out here. It's why if you're trading that, you want to be able to access this data. You don't have to trade the futures contract. You just need to know what the meaning of the futures contract patterns are. I think I said that pretty good. So you had wave number 7, that's letter G on my screen. You had price moving lower, doing less relative energy. You had the cavalry arrive. It arose. We know that's not the proper way to say it, but it just sounded pretty cool. At 10 o'clock this morning, when it generated bullish engulfing, reversal, meaning the prior candle was entirely, the body of the prior candle was entirely engulfed, but also the prior body's high and low was exceeded, and you had an uptick out there. So where's Russell 2000 headed to? Instead of looking at this chart to figure that out, I say we head over and take a look, but nice bottoming pattern out there inside the Russell 2000 on a 2-hour time frame. I do think it's the 2-hour time frame charts that are the ones that are giving the best message as we speak right now. That says, hey, you better put a 2-hour chart time frame up on your screen, Steve-O, if you say that. So let's do that. Let's change that center chart here to the 2-hour time frame. And what we're going to see is right now it is over. Now, I do have a 10-minute delay out there. So we're going to watch this pop up on our screen here in a moment. Should pop up here quickly. You're going to see that it has regained the bottom of its TAS market profile on the 2-hour time frame. So staying above 1520.50 is really important. We can see that there were a couple of times when this level here was hit, tagged. This was 10 o'clock on March the 1st. This is yesterday. And that area acted as resistance. So you'll get the most meaning and message with regard to what the markets are going to do, in my opinion, by watching the Russell 2000. If price is able to stay above 1520.50, then price is likely to head up to 1540.50. And that's an area where you're going to really get a release of information. So let's assume, first assumption, price is able to stay above this level. And if it does, then you're going to run into what should be real resistance. We say that because it's a bearish structured box. That means the center line, cyan, closer to the top of the box. And therefore, that should be where the snipers are really hanging out on the 2-hour time frame for the Russell 2000. If it can clear that level, well, then that's very strong, because that's where the front line sellers are inside of the Russell. At least that's what the 2-hour time frame chart says to us. If we look on a 30-minute chart, we don't see any resistance out here. That's the left-hand panel, so you're above that. Let's just change it to the hourly time frame, so we'll get 30, 60, and 120 covered out here. You're above resistance, meaning the top of the box on a 60. This says you want to hold 1517. The 240-minute chart, you're above that, 1522. So that's so and really 1532 looks like to be the target area. So I gave you 1536 to 1540. 1532 happens to be the bottom of the daily area out there. So watch the Russell 2000. If we try to go figure out what the IWM is doing, and I try to put my best tools on it, which would be my eyes. Let me see if there's anything that we can glean from it as a test of the swing point. As an example, where are the ETFs out here? ETF, oh, they're right there on the left-hand side. So if we go take a look at the IWM for you, try to explode this up on the screen. What did it test? Did it get down? Didn't get down to the swing point, the top of the swing point from February 9th. That had 53 million shares. You're at 18. What did get down there, though, was the Dow Diamonds. So where the Dow Diamonds closes today is muy importante, above 244.03. In rejection terms, or tests and rejections on light volume, that would be it. That would say you can't bust them down, and you'd start heading back towards the highs from February 27th. Steve Rhodes with TFNN. Be back in a few minutes. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We got a couple of questions. First one, I'm just going to read live here from the den. Says Steve, I see, and I might be wrong, that in fact Russell just tested its Stevie red line and rejected on the daily. So for me, as long as we stay below 1526, we should go back down. Am I right? Am I wrong? Happy to learn about Stevie's red line. Well, it's a daily chart out there, so thanks for noticing that, first of all. Thanks for the question. Let's go take a look at it. And what Maria is referring to, Stevie's red line, the price on it is $15.25 and a bit of change right now, and she is exactly right. Thus far, we have seen a test of that level, and it's really important at the end of the day that price close above that level in order to generate any kind of potential bullish or more counter trend rally message. And the reason is, and it's a beautiful setup question, I don't know how this happens, but it does, so thank you very much. Because if all that has occurred thus far is a counter trend rally in the Stevie's red line, and that level gets rejected, meaning a close below it, if you look to the bottom of the chart, what you're going to see is its price oscillator. And the one thing that you notice here is that that is still below zero. And that would say this was nothing more than just a counter trend rally in a chart that is still bearish out there. Now, if price can close above Stevie's red line, price oscillator is still going to be below zero. It would just say could be a bottom, could have been a bottom, but more counter trend rally to come. That's what it would be communicating to us. Then we would look for other levels of resistance. But thank you for pointing that out. As we speak right now, you're exactly correct. It's resistance. It's rejected it. But let's see what it looks like at the close. So the Russell 2000 probably going to give us the most important information today, because we're nowhere near the red line in the Dow. We're nowhere in that daily contract. We're nowhere near it in the ES. That'd be 27.15. That'd be a heck of a move. And we're not near it in the NQ. That would be 68.33. So it is probably the Russell that provides you the most amount of information, maybe with, I don't think it has anything to do with the Italian elections out there. I see you were writing about that, but probably gives you the most amount of information about what is to come. So thanks for asking that. And since you asked that question, it really leads into what I said before was gold was trading at, what is it, 1321 and silver at 1640. What does that mean? Let's go find out. And if we take a look at silver first, high-ho silver out here, because many would say in looking at the price action in silver, muy bueno. Steve-O and Maria inside the den would say, not so fast out there, because all silver has done is test, and as of 1:21 in the afternoon, reject Stevie's red line. 1649 is the number. It'll change over the the coming hours depending on what price does out there. But in order for silver to generate any type of further, at least counter trend rally or the potential of a bottoming signal out there, it has to close above that. It too has a falling price oscillator below zero right now. We know that it's falling because price is below Stevie's red line, and that is bearish as far as the message. So silver, you can't jump on the long train. You haven't gotten the confirmation with regard to silver, at least the way that I see it. And so be careful with regard to both silver and its equities. We haven't looked at the equities, but that's the message of silver. So you can't get caught up in the fact that it's up 1.1% today. When we take a look at Goldilocks out here, and it's lovely to look at, we're going to see that it has not been able to achieve Stevie's red line, 1330.70. As I wrote this morning in the newsletter, what we're more likely to see out here in the case of gold, the way that it should unfold, sounds like a poet, I didn't even know it, but what we should see is the price oscillator, and I don't know what rhymes with oscillator, but we should see the price oscillator head down towards the zero line. The print right now is 2.14. So it looks to me like over the coming days, we're going to see the price oscillator line get down to zero. And that's where you and I are going to be able to make a determination of where that next move inside of gold is. A beautiful full moon last night, was it not? It was a beautiful full moon. And it was very cool because for me, I was able to take a look at it in the front yard. And then when I was up this morning, I was able to take a look through my window, and there it was in the backyard. And no, that was like at 6:30 in the morning, and it was big and full and just beautiful. Wouldn't you just like to be able to see that every day? Well, for those of you that like the moons, you'd probably say yes. But with regard to Goldilocks, I don't see a bullish signal here at all, and would not until price got over 1330. Maybe it's just sideways. It is nice price action that we have seen inside of gold and silver over the last couple of days. And the message really is more of a sideways chop than anything else. And the reason that you and I would say that is because when we take a look at gold specifically, it's going to be the easy one to do, I think. As we take a look at gold specifically, what we're going to see, and I apologize for this delay. I don't know why this is delayed. I may have too many things open. So I'll just tell you what it is that would be posted up on my screen if it were to post up here. And that is that price has moved back above the daily and the weekly bottom of its TAS market profile out there. And even though we see the 60 and the 240-minute chart, while it's churning to get the daily and the weekly chart out here, you just have to believe me. I think 1319 is the number on the weekly, and I think it was like 1314 on the daily. So it would go a long way towards this whole at least consolidation scenario, meaning just this little sideways move out here, if gold could close above the 1319 level. My apology for not being able to show that chart to you. It is what it is, although I wish it weren't what it is. God, I'm not even seeing a data flow. Now, this is a bummer. You guys can hear me out there, right, in TV land and in the den. I haven't been kicked off, but I am seeing there's a reason that I am not seeing that data show up, because I'm not getting my chart data here to move. There we go. Okay, now we're back. Now it's kicked into action. Whew. Thank goodness, because it's a bummer when it doesn't. All right, so let's go to another question. So thanks for the question, Maria, and good spotting out there. That's what we love, wing men and wing women out there, to cover our you-know-what. So let's go take a look at the question that came in here from, well, obviously a problem with the cell phone as well, from James. James writes in, "Hi, Steve. I bought Google, the Diamonds, the Qs, the XLK. You were on a shopping spree today. Only 25 shares each when I noticed the spot volatility index. And the dollar turned up and the market started moving up. Was my action good, bad? What do you think?" Well, that's a lot. And we're just about to go to commercial break. I will tell you, I do like the XLK move. The Q's probably right behind it. So when we come back, let's go take a look. Because I don't know about Google, but we'll go take a look at each of those for you. That's for James. He's on a shopping spree. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 186. S&P is down 6. So for James, who was on a buying spree earlier, he was taking a look at the XLK, Google, and the Diamonds, I believe, were the three that we're going to take a look at. So with regard to the XLK, I mentioned, hey, I like the XLK the most at this stage, and the reason is it is such a strong, of the 10 sectors inside the S&P 500, this would be the only sector that you and I could take a look at on a daily basis and still see it with a bullish bias, a bullish crossover message out here with regard to its market breadth. So there's like 56, let me see, 40, 54, 64, 66. Is that right? 40, 54, 64. Yeah, so there's 66 individual equities of the S&P 500 that make up the XLK. You said XLK. Yeah, that's what you bought. And as we take a look at it, what we can see is 15 of those issues are above the top of their box. 12 are below the bottom, which is what gives us this bullish bias. The others are in between. They're trading in between, so kind of like in a consolidation, so to speak. So the daily has positive market breadth. So you're in the right place if the market is turning. If I take a look at the weekly is also bullish. In fact, the weekly is very bullish out here. By very bullish, we're referring to 53% of the issues are trading above the top of their box and only 7 down below. Them's nice odds out there. So you're really looking in the right place, in my opinion, when we take a look at sectors inside of the S&P 500. The XLK looks really, really good. On a 1-hour basis here, you recently, back at about 12 o'clock, maybe that's when you were on your buying spree, got a nice little bullish crossover. I believe the 4-hour time frame chart hasn't participated just yet. So you don't have an across-the-board unanimous vote out here. But it does say of the sectors inside the S&P 500, we would just simply have to stand up and give you a standing ovation. But the question is, will the XLK, I'll get it right, will the XLK on its own be able to lift all of those boats out there? And I don't know. That's where it's tough. But if we do take a look at the XLK, see what you're up against out here. So it's the right sector. Now it just becomes a timing issue. If we just use market profiles to make the assumption out here, what you'd really like to see is you'd like to see a close today above the bottom of its daily box. And that's at 67.04. That is the left-hand panel on your screen. In the center panel is the weekly. Prices above the top of the weekly. That makes a lot of sense based on what we just took a look at. And inside of the monthly, well above that as well. Doesn't look too bad, except that last month was a doji. This month, we're only 2 days into it. The leaves have begun falling off the trees. That's not exactly what you want to see. But closing up at 67.04 would be nice with regard to it. But boy, you've got to really see a change inside the S&P 500, the ES Mini out there to give you that confirmation with regard to XLK. But we do like where it is that you are at. If we go take a look at Google, just switch over to Google, GOOGL, I believe is the ticker symbol, and see what this says to us. Oh, come on, populate. Really? Really? We're doing a live show here. Populate for us. So on the daily time frame chart, price did I don't know if it did. Let's see if it did. Let's put a line out here, the line in the sand, what you'd like to, oh, it did. So what you'd like to have seen, you got out here. Now let's just check out the volume. What is Steve talking about? Come on. It's no gibberish out here. If we look at Google, we can see that its swing point low of February 9th has been tested. There was 4.9 million shares there, James, and what we've done today is 1.5. So you're coming in with light volume out here. 1051.72 was the test. Any close above 1051.72 says you have a test and a rejection on lighter volume inside Google, and if you can't bust them down, it goes to bust them up. What that means is that price starts to head back towards the gap out here or the previous swing point. So your target is going to be the high of February 2nd, 113.130, or the high here from 226, high or low, 1144 to 1129 out there. So Google looks pretty good, a nice test and rejection. You don't want to see it close badly today, because if it closes underneath 1051.72, even with lighter volume, then it can go ahead and explore the bottom out there. So that looks pretty good. And inside the Qs, well, the Qs out here, is that what you also bought? you know, oh, you said the diamonds. I think you said the diamonds and the Qs. If we take a look at the Dow diamonds out here, let me see if I switch this over. The Dow diamonds, you'd really like to see the exact same thing. I think we talked about that during the break. You'd like to see it close above 244.03. 244.03 out there. So best of luck to you, James. Nice buying spree. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Thank you, Steve. Oh,
my
are you there?
Pleasure. Yes, I am.
Okay. I like your comment on the XLK because I did buy some options on that one, but just today.
Sure,
but
sure.
The one of the questions I had is I was looking at a total return long-term type on Canadian Natural Resources, CNQ.
CNQ. Okay. And are you in this? You're looking to get in? Tell me what you're doing so I can help you.
No, I'm looking to get in now that everything is pulled back down.
Okay. So in the case of Canadian Natural Resources, the first place that I'm going to start for you is the daily time frame. And the daily time frame out here, just like we did when we took a look at Google, let's see if this thing has tested the top of its swing point from February 9th. So there were basically 4.5 million shares. Today you've done 2.4. It's pulling back on light volume. The question is, did it get down to 30.25? It got down to 30.25 exactly. So you do have a test and a rejection out here, and you do have it on light volume. Have you pulled the trigger on this?
No, not yet.
Okay. Because see where this closes. Because this is not necessarily looking like I don't have any certainty here that it's going to close above 30.25. And if it doesn't, then your price point range, your target, is going to be somewhere between 29.75, maybe even down to 29.20 out here. But on the daily chart, it has potential. It has merit. But I would just wait to see how the market closes today, more so than go ahead and pull that trigger right now. That's how I would take a look at it. You're gonna make it.
I'll wait on that. Also, if you have time, I was looking at same type of investment on WELL, WELL. It's a REIT, real estate investment trust, and does all these retirement homes.
Got it.
People over 85 need to go into retirement homes, and they're spending all the money.
They are, and but with regard to this specific equity, it's really in a consolidation. Which may not, it's at the bottom of that level right now. So it's in this about $51 to around $80 level out there. So we know that just simply by taking a look at the long-term chart. Are you able to hold on through this break here? I see we're going into a hard break.
Sure, if you don't mind.
No, don't mind at all. So we'll go back and we'll take a look at Welltower Inc. Ticker symbol there is WELL. Steve Rhodes with TFNN. Dow's off 233. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Now's off 205. We're on the line with Ron in Denver, and Ron has us take a look at ticker symbol WELL, Welltower Inc. He's looking to get in a long position in this. And so, Ron, let's just do this really one step at a time with regard to its first longer-term picture, which you and I mentioned, or I mentioned to you, that looks like this is a consolidation pattern. Now, I said that this was down towards the bottom of the consolidation. And the way that we're establishing this is because if we take a look at the month of December 1st, 2013, when this moved lower down into a price point of 52.42, it was that next month that you had that nice little bullish engulfing candle out there. Then the thing moves higher into January 2015, pulls all the way back down to the bottom of that consolidation level. We didn't know it was a consolidation until the end of the month of February 2016, when it generated a nice hammer candle, got down to a low of 52.80 out there. So we know that buyers, for whatever reason, believe that in this 52.40-ish area, that it's a good buy. And I don't mean goodbye to the downside. It would be goodbye to the downside if it closed below 52.42. But here's where, from a longer-term perspective, the stock chart is communicating to you that this is a buy zone, a buy area. Okay?
Appreciate that.
All right.
Thank
you. So when we see something like that on the monthly chart, we say, well, what's the weekly chart? On the weekly chart, what I've done here is I pulled up my other set of tools. And we're starting from the most recent high on a weekly basis, which is June 23rd, 2017. And when we start to do our wave count to the downside, it says that this week we happen to be in wave number 7, letter G, the market singing the key of G. Now, if there's a lower low next week, that just extends itself. But this is nice because you certainly like to see a pattern at least set up that gives you a signal that this would also be an area where you could see a turn. So depending on the aggression that you might have as far as taking a trade here, you might wait to the close of next week's candle. But this at least is giving you a bottoming signal as well, and would say that you would see at least a bounce up to 57.50 if this were the bottom. So not too bad. You've got a monthly chart giving you a consolidation, good support based on what we see other shareholders having done. You've got a weekly that's got that 7th wave move. And if we take that same chart and take a look at its daily time frame for you, let's just switch over. what we're going to see is price is also moving lower, doing it with less relative energy right now. And today is likely to be a Tom DeMark setup 9 count. Oftentimes, when you get to that 9 count, you can see a reversal of fortune, in this case here to the upside. We don't have any other type of bullish move out here. It's just nothing that's really confirmed here on the daily basis. We'd like to see some type of bullish reversal signal, but it does appear to me that you're looking in the right spot and at the right time for something that you want to be able to get into. So what question does that pose?
Absolutely. Thank you very, very much.
You're good. You're good. Okay. All right. So glad to look at it for you and have a great weekend.
Thank you, sir.
You bet. That was Well Tower Inc., ticker symbol WELL. I've got a question out here. This came in from Jamie, and Jamie just asked, what are my settings on my price oscillator? So and let's just pull up the Russell 2000. Well, you might not have access to that. Let me pull up something that you would have access to. Well, probably Wellness, WELL, which is what we were just looking at. And what you will see is that the settings, they're here on my left-hand side, because what Jamie is saying is that whenever he takes a look at his price oscillator, it generates a different result. Now, I don't know what software you're using, so that makes it more complicated out here. But what you want to be looking for is, I would suggest this, just use your MACD tool on your software package. And hopefully your MACD allows you to choose exponential moving averages. Some don't, because the original MACD was based on simple moving averages, not exponential moving averages. But hopefully it allows you to do that. What you want to choose is the 19 and the 39 period. So if it's daily chart, it's a 19-day and a 39-day. If it's a monthly, it's 19 months and 39. So 19 and 39. Those are the only two settings that you really need. You're going to have to fill something else in there for, but it's just the 19 and the 39. And all you're looking at is the MACD line. Okay, so get rid of the cross line, the signal line, and everything else that's out there. And on Wellness, right now mine says minus 2.4, and that should work for you. If you're using a tool that says price oscillator, you probably are getting a different result. And I don't know what in the heck they actually use there. This is the one that you'd like to use. So try that for Wellness here. I'll put in QQQ. Let's just do that for you. And that way you can check it out. And right now you'll see that mine reads 141. So, Jamie, I hope that helps you out, and I hope that you start getting the same results that that I'm getting. And makes it a lot easier when you're taking a look at the show out here. So, looks like that is all the questions that we have as of now. But I'm happy to take yours too. You can just give us a call like Ron did, or you can let your fingers do the walking like James and Jamie did. Doesn't matter to me. Steve at TFNN.com. Just inside that, and send those emails in earlier than later. And the reason is because I can't control, well, many things I can't control, but I most certainly can't control the internet service providers out there. And so sometimes you send them in and I don't get it until after the show. So for whatever reason, just send them in as early as you can, and then happy to take a look at whatever it is that you're looking at. So what else do we want to look at here to try to figure out what the markets are doing? Let's take a look at our daily profiles for the ESNQ, Dow, Russell 2000. I think we've sort of covered it. There's really no great news here. The good news would come from the NQ if it ever closed back above 68.23, the top of its box right now. It's just kind of hanging out. The Dow and the ES, there's nothing good here from a profile standpoint. From a weekly standpoint, if we switch over to them as well, if the ES is able to close above 26.74, well, then support will have held on the ES. The NQ looks good. It's up above the top of its box. The Dow needs to close above to give some type of, message out there. Needs to close above 24,571. And for the Russell, the number is going to be 1530, even Steven out there. I do see a question says, hi, SR. I will say hi, Z. ESH8, the current contract declined. Now it's a bounce. Can you share parameters you look at to judge where the bounce may stop? Many thanks, SR. So if we take a look, and so if we let's look at it from first, just from like a very short-term standpoint. 10-minute chart. out here. Let's just use the 10-minute chart and see what we know. We can see out here, and this is using Stevie's momentum indicator, and which really helps us to understand when there's buying pressure, you'll see those red squares. When there's selling pressure, you will see the green squares out here. Right now, what we saw basically coming off the low at about 10:30, you saw your first little red box form. Then we saw another little red box form out here at 12 noon. What that meant is in between that time period, sellers were not able to drive this indicator that we're looking at the bottom panel down to the bottom level of 20. We just got one of those. You'll see it says U for uptrend. It looks like these highs are going to be tested again. And highs in this 2688 level. That has been your deflection point to move lower. Let's first see if that area gets taken out. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So in the next 2 minutes here, we're going to try to answer the question, which is where may the bounce stop inside the ES Mini? Where are the areas to be able to look at? We looked at the 10-minute chart out here. The 30-minute chart shows it much clearer in that each time that the ES Mini gets up into this 2684-ish, 85-ish level, this is where the sellers are. And the reason that we say that is because it's very clear. We just simply take a look at the Japanese candlestick. We take a look at the bearish engulfing. This is at 20:30. This is last night. We take a look at a shooting star up in this area at 2:30 this morning. We take a look at 4 o'clock this morning, this little dark cloud cover. We take a look at the recent bearish engulfing candle here at 1:30. So we know that this is where the sellers are camped out. If price is able to close above those levels, that tells you that that front line of sellers has simply failed, and nothing like old resistance becoming new support. So that answers the question, at least on the short term, 10-minute and 30-minute time frame out here. Now, what you did see is that price came down, tested and rejected Stevie's red line. So that's short-term, more counter trend rally, but it's got to clear that 26.85 in order for the sellers to start saying, oops, maybe not this time. If we take a look at the 60-minute time frame out here, what we're going to see is price needs to stay above this 26.68 level out here. If we look at the market breadth, this is the shortest term market breadth. Well, it's really not, but it's the shortest one that I'm going to show you right here, right now. And what you're going to see is right as we speak, right now at 1 o'clock, well, as of 1 o'clock, we saw inside the SMA. This is why that 26.85 is such a critical area. Right now, this is showing you that sellers also have control because there are 154 issues in the S&P trading below their 60-minute box and only 136 above. Therefore, you've got sellers still in control. Our conclusion, watch 26, 85 like a hawk. And the rest is stay tuned because your favorite polar bear, everybody's favorite polar bear, he's up next. That's David White. Have a fantastic weekend if you're in the north. Be safe out there. Come on down to the south. We'd love to have you. Have a great weekend. We'll see you on Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.